Deputy Owen Murphy.
Thank you, Chairman, and thank you, Mr. Goggin. If I could bring your attention to BOI B2 Volume 1, and it's page 23.
Yep.
It's about the establishment of a dedicated property unit.
I referenced this earlier on. Yep.
And this document's from 9th November 2004. So I just want to just read out a couple of bits from it. The property market in the Republic is shaped and controlled by less than 100 key players. In the past 5 years, we have underperformed in this top-end market, which has been dominated by banks with specialist property units, most notably Anglo-Irish Bank. And then skipping down, a dedicated property unit is being established in corporate that will be responsible for managing relationships with total group exposure in excess of 30 million. Whose initiative was that new unit?
That was, what was the date of this again?
It's not dated on the document itself, but it's from November 2004.
That would have flowed out of whatever the strategy we had at the time into our annual operating plan, and it would have been a decision of management in terms of executing that strategy to do this.
Were you CEO at the time?
When did you say it was?
November 2004.
I was.
You were, okay. So this would have been a decision taken by you as CEO with the approval of the board, or how would that
Yes.
work?
Well, okay. The strategy would have been approved by the board. I had authority, once approved, to implement that strategy.
Okay. And so can you remember who looked at Anglo-Irish Bank and said they have a specialist property unit, we should have one too?
I'm not quite sure it was quite as blunt as that. We looked at the entirety of the market. The bank had been involved and was involved in property over a period of years. But this was clearly a market segment that our conservatism had excluded us from to a significant degree. And on examining it, we saw opportunities in it. I think the manner in which we kind of pursued those opportunities were consistent with the economic expansion in Ireland, the building of shopping centres, the building of roads, the buildings of bridges. This unit was also focused very much on the UK market.
Am I right in understanding, though, that you restructured departments in the bank to establish this property unit because of what Anglo was doing?
No, not exclusively because of Anglo. It was to avail of the opportunities that were emerging in the market. Anglo happened to have a particular business model. Anglo was a monoline.
Sure,
Bank of Ireland was a very different bank. But the chairman referenced earlier on that 22 or 24% of GDP was coming from construction-related activity. So this was a huge piece of the economic engine in Ireland at the time. So I was responding to that, not responding to Anglo-Irish Bank.
Right. But you specifically, mentioned Anglo-Irish Bank in the note here, and then them having a specialist property unit, and you're setting up a dedicated property unit. So are you imitating Anglo-Irish Bank?
No. Bank of Ireland never imitated Anglo-Irish Bank.
So why are they referenced here in the establishment of this property unit, which is a restructuring in the bank? Yeah.
Anglo-Irish Bank, was the player in the property market. That's all Anglo-Irish did, was property. They seized the opportunity as the economy was reshaping. And I go back again to the comment about the proportion of GDP made up by construction. And Anglo was in there. They were seen by the marketplace in terms of their PE rating. They were, acknowledged by analysts. They were, acknowledged by everybody. And we did not follow them, but we had to recognise them as a bank that had clearly identified an opportunity.
You did not follow them, but you copied them.
No, we most certainly didn't copy them either.
But they had a property unit. And then you established a property unit.
Sure, all banks had a property unit.
Why did you not mention the other banks then?
Well, maybe we should have. The property unit here was set up in the area of the bank that had the highest order of sophisticated skills for dealing with complex credits. So in setting it up, we positioned it in the part of the bank that was best equipped from a skills and experience perspective to consider that market opportunity and to underwrite risk in that market opportunity.
The market opportunity that Anglo was taking advantage of?
No, the market opportunity that was a function of the economic expansion at the time. Anglo was a significant participant in it.
Okay. What does managing relationships mean? What does it include? A dedicated property unit is being established in corporate that will be responsible for managing relationships.
Yeah, the whole business model in corporate banking, and I spent many years in my earlier career working in corporate banking. A corporate banking relationship manager was assigned a portfolio of relationships. So when I worked in corporate banking, I had 20, 25 very key banking relationships. In my case, they would be multinational companies, they might be semi-states.
And how did you manage those then? Through hospitality?
No. I manage them from the point of view of meeting their banking needs. That might relate to their operating current account, electronic banking, provision of car leasing finance for their fleets. It covered a multitude of things. That's how I was motivated and tasked with managing a relationship.
And did it include offering new lending on new terms in a proactive manner?
To the extent that the customer had a need. The customer had the driving force for lending demand in the kind of relationships now we're referring to. These are very sophisticated companies. Mm-hmm. Major Irish quoted companies, public companies. They might be expanding, they might be investing in plant, they might be making an acquisition. I don't want to mention names, but they're obvious, the ones I'm talking about. I had responsibility in my early years for managing relationships like that, and I would meet with the finance director of those companies on a regular basis and ensure that Bank of Ireland was meeting the needs. Many of these banks too, many of these companies would have been multi-banked.
You were looking for new opportunities. That's why this unit was established. So in looking for new opportunities, were you presenting new opportunities in these relationships with the key lenders, the key players, as you refer to them?
Yes. I mean, if Bank of Ireland had a proposition that we felt might be of interest to a substantial, sophisticated multinational connection, oh yes.
So you would go to someone then with a proposal for a new loan for them?
It mightn't be a loan. It could be a pension scheme. It could be anything.
No, new line of questioning.
But yeah, lending was part of the product suite. It was a significant part of the product suite. But I would not go, in all probability, I'm putting myself back in a position which I can relate as having been a practicing corporate banker. Company X, PLC, they weren't going to take money from me just because I said to them, you should have money. They had to have a fundamental need. They were either expanding, they were growing, they were acquiring, or they were restructuring their banking facilities. That's what gave rise to the need. And I wanted to make sure that I was in that frame when the opportunity came around.
Thank you. Why was retail property team? Why were they brought into that new unit?
Because the sophistication was in that unit. And we felt that from a control and risk management perspective, that's where it should be.
Private banking had the experience.
Private banking was much smaller.
Deputy, this has been exhausted, and I'd like to open up a new line of questioning, if you can, please. All right, so I'll go into that space.
Thank you, Chairman. If I could take you then to BOI B4, Mr. Goggin. Volume 1.
Yep.
Pages 27 through 31.
Yep.
So this is documentation from the financial regulator, December 2007.
2007, yeah. Okay.
See the top page 27, and it's also got a schedule from December 2007 as well, and where it points out specific findings on page 30 for your bank. It appears that no comprehensive review of exposures to a group of connected borrowers is conducted on an annual basis at point 2. And if you go down then as well to M3 at the bottom of page 30, inspectors noted that private banking, which is responsibility for certain exposures within the that's redacted group, did not review facilities provided to 2 of the principals for a period of over 17 months. How were these internal control issues allowed to arise? The financial regulator had to bring them to your attention.
Look, in any business as substantial and as large as Bank of Ireland, issues will arise from time to time. The response by Bank of Ireland to those findings, I have here. It didn't come in my core documents, but I requested it of the bank, and I can read the answer to you because it deals with these specific issues, just the Bank of Ireland specific issues. In terms of credit reviews, M1, Bank of Ireland Corporate Banking would stress that when it reviews all borrowing relationships, connected exposures are grouped and clearly highlighted in the credit papers. The BOI Corporate Banking Credit Unit and our Credit Committee therefore have full visibility on the complete risk picture. There are, however, limited situations where exposures are linked by a common shareholder who indeed may only have a minority stake in the borrowing vehicle. Where Bank of Ireland Corporate Banking aggregates these lines with the other exposures for reporting purposes, there may be no financial dependence on that minority shareholder for the connected risk. For these reasons, Bank of Ireland Corporate Banking believe its approach in these limited situations of aggregating the exposures and reviewing the risks separately is prudent, and it can assure the financial regulator that where a credit issue arises in a linked exposure, it is promptly reviewed and dealt with, bearing in mind the overall connected limits. And in relation to M2, the response reads, since Credit Committee on the 30th of August 2007, Bank of Ireland Corporate Banking has exited the blank and has achieved a significant reduction in exposure, and the risk on the residual facilities remains within tightly controlled parameters. The strategy remains one of prudence and risk containment to this connection. So we substantially exited that connection. And the frequency of reviews by private banking, the financial regulator's recommendation is accepted and agreed. That was the formal Bank of Ireland response to those issues, Deputy.
NAMA faced a problem, though, later on, to the tune of 26 million for properties and lenders where the security wasn't as secure as it should have been. And
in relation to the Bank of Ireland?
Yeah. I have the figure here. We paid 26 million in respect of unenforceable security on transferred loans.
Well, again, the transfers to NAMA occurred, a year and a half or more after I retired, and I wasn't involved in that process.
Those loans would be put in place while you were involved with the bank, as these financial regulator reports refer to.
Oh yes.
2007. They're finding these problems.
The transfers to NAMA. I mean, we know that Bank of Ireland's haircut was a significant 43%, but significantly less than the 59% average. However, the haircut that applied to the 10 billion or so of loans transferred by Bank of Ireland to NAMA, as I understand it, the haircut applying to imperfections in documentation and security amounted, on a substantial transfer of 10 billion, to 0.10%. So the evidence here points very much to a bank that had its documentation and security in pretty good shape.
This 26 million was subsequent to the transfer.
Well, I can't comment on a particular transaction that I'm not familiar with. There was some issue with it, in all probability, as you've pointed out.